Welcome everybody to our next live stream. It's been about 10 days. I've been away, and this is what I like to do from time to time. Take a step back, watch things unfold, because if I say the same thing every day, people may become a bit numb to it and may not really take in the information I'm trying to warn about. So taking a step back, let things unfold in the markets, in the economy, and really what's going on with the global conflicts around the world. And we have had some huge events and some huge news, some huge announcements happen over those past 10 days while I've been away. So this is going to be an action-packed episode. I've got a lot to cover to catch up on what's happened in the past 10 days, but there's something else that is emerging that I don't think anybody is watching and nobody is preparing for. And that's what I want to discuss in today's video as well. Because we've seen some huge volatility in the markets. We've seen the conflict between Israel and Hamas intensify. And also the inflation crisis we have experienced ever since 2021 that many people said was over. Well, that could have just been the first wave, okay? We saw CPI peak at about 9% last year, and inflation, or should I say the CPI numbers, have come down a little bit. But what if that was, like I said, just the first wave, and we're about to see an inflation spike after this reports that I show you what's about to happen, something like what we've seen in Argentina and Turkey. And also I'm going to go over how even if the stock market goes up, or even if we see a stock market boom, that may be even worse than a stock market crash. So everyone, without further ado, let's get straight into the news, the facts, and the data. So first things first I want to cover is this, and this is absolute insanity. When we have an inflation crisis and central banks are trying to tighten things to stop inflation, and when the US government is so in debt, the US government is borrowing like there's no tomorrow. This is absolutely crazy. Look at this. Treasury to borrow $776 billion in the final 3 months of the year. Now, just imagine if they actually end up borrowing $777 billion. Would that be a sign of something? Who knows? So, in a closely watched announcement Monday afternoon, the Treasury Department said it will be looking to borrow around $776 billion. The Treasury said it expects to borrow $816 billion between January and March. So the announcement comes 10 days after the government said the fiscal 2023 budget deficit would be $1.7 trillion. Now, people, this is absolutely insanity. It can't keep on going on like this. And it's going to get to the point where the US Treasury will be borrowing $1 trillion every single month, especially if this conflict between Israel, and now it's not just with Hamas, they're fighting on the northern border or the southern border of Lebanon with Hezbollah. There's been strikes happen in Syria. Even the US military has done some strikes in Syria. We all know Israel bombed the airport in Syria. And Turkey sending some warnings, Iran sending some warnings. So if you think this borrowing binge they've been on now is a lot, just wait until you see what happens if a broader conflict breaks out in the Middle East. Now you may be thinking, well, look, that's fine. They can just print money out of thin air. Well, no. Do you know what happened to taxes in World War II? The top tax bracket skyrocketed to 94%. So you're all going to be paying for this. And even if they don't increase taxes, you'll be paying another tax. That's an inflation tax. And inflation is much higher than the CPI data that they're putting out. And I think it's about to go much, much higher. We're getting more and more signs that things are starting to melt up. And if they keep on borrowing like this, we could see borderline hyperinflation. Now, also, this came out. Apparently, the US economy is booming. So, strongest US economic growth since 2021 puts the Federal Reserve in a tough spot. So, surging consumer spending. Well, I've got data to counter this later on. And Powers caution fast growth could justify higher rates. Now, I think the Federal Reserve is lying here. I think they're playing chicken. They're talking tough, But really, if they had any credibility, they wouldn't have stopped lifting interest rates. Inflation's still too high. The unemployment rate, according to them, is still at record lows because the economy is doing so great. You'll get to work 3 jobs now. You're working 3 jobs a day. Things are doing so good. Well, no, it's not because things are so great. It's because people are having to work 3 jobs just to try to get ahead of this inflation. People might have started a side hustle, got a second job to try to get ahead on these bills, only for their utility bills to increase 20%, for their fuel costs increase 20%, food costs increase 15 to 20%, and they can't get ahead. So they said here, gross domestic product is projected to have grown at an annual rate of 4.5% last quarter, more than double the pace in the prior period. Now, what nobody's talking about, what nobody's watching is the reason why these figures are looking very, very strong is because of inflation. The CPI is about 3.7%. I think it's at least double that, and we could easily say 8% inflation. I'm sure you can agree that there's at least 8% inflation. So really what's happening is everything's just becoming more and more expensive. And also what they're doing is we're seeing record migration, legal migration and illegal migration. But when you see migration, that helps the gross domestic product. And that's why we're seeing a huge housing crisis, because we're seeing floods of millions and millions of immigrants, legal and illegal, enter the country. This is happening in Australia as well. We've had record 500,000 net migration this past year with a population of around 25 million. So this is why these economies are so-called looking good. But when you look at a per capita basis, the individual has never been in a worse financial situation. Their credit card debt is skyrocketing, their savings is dwindling, and now just to exist, just the basic essentials like housing, food, transportation, insurance, education costs, it's pretty much taking up all of their income. Now, we have to talk about the stock market. The S&P 500 notches its longest monthly slide since 2020. So also, the yen's historic tumble lifts dollar as stocks climb on Tuesday, and BOJ's minor policy tweak disappoints traders expecting more. So even though the stock market is on edgy ground, it did slightly enter correction territory in the NASDAQ, we could see a stock market melt up if this inflation crisis heads much, much worse. And what a lot of people get wrong is they look at the stock market, and as long as the stock market hasn't crashed, they think everything's fine. Or even if the stock market goes up 10%, they think the economy is booming. Well, another country's stock market that's doing great, whenever I tell you this country and ask you how good do you think their economy is, how would you be willing to invest in this country? I'm sure you would all say no. And what country is that? Well, that's Argentina. Look at their stock market. I'll go ahead and move myself so you can see here. Their stock market is going parabolic. This is a 5-year chart. We can see here since June 2022, their stock market has pretty much gone vertical. Now, are you bullish on Argentina? Do you think they have a great economy? No, it's because the stocks are priced in their currency. And same thing with the US. Stocks are priced in their currency. So if they print more and more currency, or the US prints more and more currency, and the currency loses its value or loses its purchasing power, stocks simply go up. But that is not a sign of a strong economy. The same thing happened with Venezuela. They didn't have they had a terrible economy. They had hyperinflation, but their stock market went up in their currency, okay? But that does not mean everything is fine. And if we saw the same thing happen in the US, like I said, it would actually be worse than if the stock market crashed 50%. Because do you know the scenes we would see? We would see grocery stores, we would see bakeries, etc. They'd be changing their prices every day. You go to buy a loaf of bread one day for $10, and the next day it could be $20, okay? This would be worse than an economic depression, because once you have hyperinflation entrenched in the economy, it's very, very hard to stop, okay? Right now, when inflation's a bit high, the Federal Reserve should be lifting interest rates aggressively. But the reason why they don't want to do that is because if they lift interest rates to what they need to go to at about 8% or even 10 or 15% like what they did in the 1970s to stop inflation, we would see all the banks collapse within months. That's why they don't want to do it, but they're playing a very, very dangerous game. So let's now go into our next segment of why I'm saying this will happen and why central banks are so scared. Look at this. So go ahead and adjust this here. Zombie firms are filing for bankruptcy as the Fed commits to higher rates. So what is a zombie corporation or a zombie company? That's pretty much a company that can still exist but only pay the interest on their debt. They're not making any profit. They're actually losing money, but they're just getting by. And there was a lot of zombie companies when the Federal Reserve dropped interest rates to zero. But now interest rates are at 5%. We're going to see a wave of bankruptcies. Just like this company, WeWork. There's rumors that they're going to announce bankruptcy tomorrow. And this is a result of, obviously a company running very poorly, but also high interest rates. Now, listen to this. I'll go ahead and highlight this here so it's a bit easier for you guys to read. Roughly 10% of companies in the US are considered zombie firms, according to a Federal Reserve estimate. That's right, 10%. Now, you know what would happen to the economy if 10% of these zombie corporations went under? We would see huge domino effects, and it would start to affect the corporate bonds in the corporate bond market, and it'll send interest rates skyrocketing, and it'll cause more companies to fail. And this is why the Federal Reserve is beating their chest, saying, "Yes, I'm going to stop inflation. You let me at it. I'm going to let it rip." When no, really, they're panicking. They know that they're bluffing, and they can't afford to lift interest rates anymore without severe economic pain. But like I said, this is a lose-lose situation. Either they create a huge economic crash and reset the economy, or we're going to see borderline hyperinflation. So the Federal Reserve's swift interest rate hikes are making long suspected zombie firms go bankrupt. So in the first 9 months of 2023, listen to this, 516 companies filed for bankruptcy, according to S&P Global Intelligence. So all those people saying, "Look, when's it going to happen? It's happening now, people." 516 companies filed for bankruptcies. We're seeing huge volatility in the markets. We're seeing the bond market trade like a cryptocurrency, okay? Things are happening now, but it doesn't probably play out how many people expect, where they think that, a crash is the stock market tanking 50% overnight. It doesn't work like that, people. It's a slow process. But when you look in the rear view mirror, you will think, wow, we definitely saw it coming, but didn't pay attention. Now, again, they all said that the US consumer is strong. That's why GDP is booming. Well, we just got another report here to say that's not true at all. So US consumer confidence falls further in October. So US consumer confidence declined for a third straight month in October. But what happened, everyone? I thought the economy was booming because the US consumer was doing so good. Type 1 if you think the US consumer is doing good, or type 2 if you think the US consumer is really struggling right now. So worries about higher inflation, like I talked about, high borrowing costs and political environment, a survey showed on Tuesday. And I completely agree. Everyone is worried about inflation. What happens if we're not even beginning to get close to the peak of interest rates? What happens if we see another round of inflation and more interest rate hikes? And like they said, the political environment, we're seeing a huge political divide in the US right now, and really in the West. And we're seeing the geopolitical landscape look more dangerous than ever. So also the Conference Board said its consumer index fell to 102.6 this month from an upwardly revised 104 in September. Economists polled by Reuters had forecast the index slipping to 100 from the previously reported 103. So everyone, I know you're thinking, well, okay, what does all this mean in simple terms? What this simply means is the US government is doing exactly what the Roman Empire did before its huge fall and demise. The Roman Empire would dilute their coins and add in cheaper things in gold coins and silver coins like copper to fund wars. Well, what is the US government doing now? It's funding the Ukraine-Russia war. It's funding the Israel versus Hamas, and now going to be the broader Middle East war. And I think it's only a matter of time. China is waiting very, very patiently for the US resources to be depleted before they try to do something with Taiwan. I think maybe in a year or two, the US government is so heavily indebted, maybe they've drained some of their military supplies. who knows, they may strike and try to take advantage of this. And unlike the fake reports they're putting out with GDP, the economy, when you look down to the individual, they're struggling more than ever, and inflation is at risk of seeing a second wave much higher than the inflation we saw last year and we're still experiencing now. Remember, prices aren't going down, they're just increasing at a slower pace than the crazy pace we saw in 2021 and 2022. So now I know we're thinking, well, okay, what can we do to prepare? Because it's no point me telling you how bad things are without some solutions. Well, some also other very, very interesting things have been happening over the past 10 days. Have you been watching gold? Have you been watching silver? Have you been watching Bitcoin? People are getting out of the financial system and they're becoming their own bank. With gold, you can hold your gold. No matter what happens, an ounce of gold will always be an ounce of gold and it'll always hold value. But more importantly, when things really hit the fan, you're going to need more. You're going to need food. You're going to need your preparedness items because you can't eat gold. You can't use gold to defend yourself. So obviously, first things first, pay off your debt, have an emergency fund. But you know what's very, very interesting? All those long life foods that preppers would buy in 2019, they've actually outperformed the S&P 500. These long life food items that preppers were brought, they've gone up 50 even more %. So if you go ahead and buy that food now, you'll have a huge savings and it might even out-return the stock market. Again, all other essential preparedness items you will need now because they're going to get very, very expensive. Not only they'll get very, very expensive when things really hit the fan, but you won't even be able to buy them, okay? So get them now, and once you've done that, if you're wanting to make some money, okay, if you're wanting to get your family in a better financial position to weather this storm, gold, silver, Bitcoin, I think will massively outperform, because what we saw during the market banking crisis is Bitcoin is a lot more liquid. It's a lot more easy to transact than gold. And gold and Bitcoin, we're really allies. We're against the centralized banking system and against the fiat currency system that continues to devalue your money. So you want to have some gold and some silver and some Bitcoin because I think they're about to go up absolutely out of control. I think there's going to be a massive bull market. We saw gold hit $2,000 an ounce, actually surpassed $2,000 an ounce. Bitcoin hit $35,000 because people are waking up and they're getting out of the financial system. Obviously, if you're wanting to learn how to do that, I've got a course that teaches you all the basics and fundamentals about that. You can click the link in the description. You don't have to buy it. Just if you're wanting to get more and more education on how the cycle with gold, silver, Bitcoin works. But again, people, you're definitely going to want to prepare because things are going to get very, very bad very, very soon. But what do you all think about this? Let me know down below. It's great to be back. I'll be back with more daily updates as of now. Thanks for watching. You're awesome. I'll see you all in the next video.